Hi guys, I was doing this June review for the past few days, and honestly, at the end of the review, I just found out that maybe if I would have done this review faster and right after the month of June, my trading would have been better in July, since I have found out quite a few things that might enhance my trading quite a lot in the following months. So let's just get into it. Basically, I have found out some good tweaks in the month of June with this review, and obviously it was a break-even month, unfortunately, but as long as you can learn something from your past trading and you can tweak them to be better in the long run, I think this is a big win, and I think it's an unsung hero of the reviewing process. This is what we're doing it for, and this is what we should be doing every month, because at the end of the day, the work is journaling and understanding what we're doing good, what we're doing bad, and what we should be progressing onto when we're talking about trading. The first trade in June was actually a short on hype. And I think here we had an all-time high around $59. I think shorting blindly like this isn't the best of ideas. If you can see it here, I shorted around 70 with stop loss around 80. The problem, well, obviously I had some Fibonacci extensions about $75 here. The problem that we have is that there is no real structure for shorting here. I think the second short that I have gotten, even though I went out at break even because I was afraid of keeping it, I think this second short would have been, I mean, it should have probably been the first short, not the second short, because here we had a breakdown and we had a clear move under this pivot here that was maintaining a bullish market structure. But other than that, this was a win. I have just went bigger on the position once we kept going down. But I think that on altcoins, it's better to just take the profits faster. I think I would have had a way bigger profit if I wouldn't have lost this trade here, for example. This 100 pieces of hype trade, stop loss 4 has actually been hit. And so I think that I should keep in mind that when I'm trading altcoins, I should either have a smaller position or I shouldn't be compounding this aggressively. Sorry, I had a small coffee break. Now, I had at the same time with the hype short, because hype actually saw big volume in the month of June. I had a long on Bitcoin, which unfortunately didn't go as planned. Here I really liked the well, people call it the Iran war low, and I thought that if we will go lower from this, we might actually just keep plummeting. Honestly, since there is not enough volume here, the move down wasn't really as big, and I think that there is no real power to the downside lately. Obviously, we're in a small bear market and we're moving down with market structure, and there is no buying power and there is no proper low, so we can get a lot of shorts and a lot of people out of the market in order to go higher. But this trade and the next trade is the exact same thing. Obviously here I paired it with Solana long, which I also lost. What happened here is that I saw that we had a nice candle, and I thought that I can capitalize on this and at least get some move up, because at this point we moved down very fast, and I would have liked to move up pretty fast as well. Obviously the lack of volume in these months is showing up, and you can see it clearly that if we would have had a bigger, just some more volume in these months, we would have probably seen bigger moves. But this is not the case for now, and we should adapt to what the market gives us. So these two trades here, unfortunately very similar. Unfortunately, I tried to. I'm not sure if it's catching a knife, but I tried to play with the market structure. It didn't work out for me, and that's fine. I think it is what it is. Then I had some longs once more on Ethereum and Bitcoin. Both were winners, but at the end of the day, I'm taking ideas when I'm checking my percentage win. It was around a 1% win. Now, the thing here that it's the exact same thing that I always do. I'm looking for continuation. We had this 67K high here that looks extremely awkward. And I actually wanted to see if we can breach this and go to around 68, 69, 70K here with the same idea that we moved down very fast. I expected us to at least have some power when we're moving up. And so I did the same thing that I always do. I went in on this trade when I saw that we're actually creating a bottom here, a local bottom at least, and I started pushing it forward. Now, the problem is I think I have this compound too close to the actual current top, and we already moved decently. I think I think it was a type C if I'm checking in my journal, which means a scalp, but unfortunately it wasn't the case. And we moved lower. I took another long here, but I actually closed it because it was in the weekend, and I thought that maybe we would just continue going lower. Unfortunately, this was a very good trade, a big trade, but I kind of butchered it by the fact that I wanted it to go a bit higher to around 70K. Unfortunately, I didn't really adapt to this this period of trading where everything is pretty slow and everything has low volume. But I'm getting there, no problem. Then I had a short on Bitcoin plus Ethereum when I saw that we actually might end up having a local topper at around 67K, and I just shorted the lower high that we created here with a stop loss around 68K, where I actually wanted to see the price going before, and I didn't get the opportunity to see it there. And I shorted once more, but I think I closed my shorts a bit too early. I expected here that this bottom, this current bottom that we created here, to maybe on the 6th and 7th and 8th and whatnot, and the retest on the 10th and the 11th of June to actually hold, but apparently it didn't. And this is what happens when there is not much volume in the market. There aren't enough buyers in order to keep this from breaching. The problem in bear markets, and that you have to know as well, is the fact that when you're looking at volume feeds, when there is a lot of volume, usually there are short squeezes when there are when we're in a bull market, right? There are short squeezes when people are entering shorts at the lows, when people are shorting aggressively in some zones of the chart. But in bear markets, it's the exact opposite. Okay, when you see people that are longing at the extremities of the chart, it's very possible that you are going to get them squeezed to the bottom. And I think this is what happened here. I think we had people thinking that this can probably hold, just as I thought. And so in bear markets, if you see shorts entering the market, it might be that it will continue down. Just as in bull markets, when you see longs going in at certain market contexts, it will probably continue going up. Now, that is a good thing to keep in mind. Longs on Bitcoin and Hype, well, they went kind of bad, because when I closed my short, I actually started going long after some time, and I used this as a stop loss this week as a stop loss. Weeks don't matter as much in bear market and when there is low volume, so this is something to keep in mind. Bitcoin plus Hype minus 1.1%. The last trade of June was an actual long that I tried once more with even compounding here, and it was a minus 0.85%. Now the problem that I had here is what I usually do, which is, obviously we had an SFP here, we took the liquidity, this long was pretty good, but the problem is that I went with the compound too fast when we didn't really see much of a move up already. And I think this is something that I should keep in mind, where if we don't really see a specific move up, I shouldn't really take another trade close to this as a compound, just because of the fact that what happened here is that there was another liquidity grab. We basically made a current bottom that we're still keeping here at around 57K. Not much volume, not really big low here, but just as we didn't have a special high at 67K that would show a clear shift in the market direction and the context. We didn't have this low either with a clear shift in the market direction. And so these are the trades for June. And I think first things first, due to multiple months break even or slightly losing my 50k accounts, I got a bit too greedy. I think the most of the trades, now that I'm looking back on June, were fine, and I think some compounded trades were too hopeful in ranging summer months. This is exactly what I said. Compounded trades were too close to each other. Summer is really bad for my trading style, and I have to keep this in mind moving forward, just because of the fact that when I'm doing well, I am usually winning big on good moves during a day, right? So on continuation days. Now, this is a good thing that I noticed in June and would have helped me in July, which I didn't know about because of the fact that I didn't do my due diligence to have my review properly aligned with the end of June, which is implementing a 12 to 24 hours waiting time before assessing a new trade could help. Just because of the fact that I'm resetting mentally, I'm seeing what the market shows, and I'm not going after the market. I'm letting the market come to me, and I'm getting more data. It's important to get more data when you're entering a trade, and I think I'm doing too much of a ring around the rosy of shorting and longing and shorting and longing and longing and shorting. Even though these months are bad for my own standards, now after reviewing my trades every single month, I'm pretty happy with the fact that I'm not losing as much when I'm not really on my A game. And then the big thing is that I'm keeping myself kind of grounded when I'm making mistakes, so I'm not really making them big enough to blow me out of the water. So I'm pretty happy with that. As of the last thing that I have added here of the review is that I have noticed that one of my big edges, if not my biggest edge, is that most of my profits and what keeps me consistently profitable is continuation days, right, with volume and power, just because of the fact that when I see that we're going in my direction, I'm compounding properly and I'm literally going for the good profit day. And this is literally my bread and butter. So I have to keep in mind that in order to keep myself highly profitable, I need to understand that when there are summer months, or maybe when there is not enough volume in the market, or the volume is in other markets like it is right now, maybe it will switch in the following months. I have to keep in mind that there will not be many continuation days, if any. And I have to keep in mind that this is what brings me the big profits. So continuation days, opportunities to compound properly. And so this is the review for June. I hope that this made sense. It obviously made sense for me. This is why I'm doing this. And I hope that some of the things that I have outlined here will help you as well. Thank you so much for checking out my review for June, and good luck.